All right, this is the market overview for Monday, March 20th, 2023. What is going on? Well, the markets are up a little bit. Dow's up over 1%, S&P 500 up 0.5%, Dow's off about 0.25%. Headline right now, First Republic continues tanking, but other regional banks are rallying on Monday. And of course, the big news in the global banking sector, Credit Suisse got purchased by UBS. And the article here is UBS record rescue of Credit Suisse doesn't resolve US banking crisis. Well, that's an interesting headline because I don't think there is a crisis. Had a couple banks had issues. Overall, the sector is fine. And if we look at I think market participants, financial writers notwithstanding, market participants agree with me based on what they're doing here. Market movers, who's up? Banks, and more banks. Zions, First Third, Comerica, US Bank Corp, Key Corp, Trust Financial, Regions, Schwab, and on and on. Problematic banks, First Republic, bam, getting tanked. Is down. That's interesting. Kind of a under the radar move, but AMD, Amazon, Microsoft, Intel, Nvidia, Intuit, down.
The other thing with the banks is they say, the Silicon Valley Bank wasn't a traditional bank.
No, they had a very specific client focus, right? It's not yours and I's deposit.
Correct.
Yeah, practically no one there was under the FDIC protected limit.
And they grew very quickly with the recent tech boom. And so there were limits put on, say, like Wells Fargo, Bank of America. They couldn't take all those deposits. So all the deposits for the people out in that area, the tech world, were put in SVB, and they grew like ridiculously quick.
And they took some high risk.
Yes.
And they
Well,
got caught out. So
well, some of it was just government bonds lost their value, and they'd have to sell them at a loss.
yeah. So the big narrative there, I don't think there's a banking crisis. Headlines misleading, my opinion. So that's kind of where we stand. Regional banks are up, tech is down. S&P 500, the major index, let's take a look at it. Well, it's up. Come on. Trying to grab the right screen and move it here. A little issue with my computer. Wait just a second. Some days it all works and some days it doesn't. Here we go. Finally. All right, S&P 500 daily chart. What's going on? These these wedge formations have been very powerful lately. This one was a breakout to the downside, good follow through there, breakout to the downside, good follow through there. This one was a break to the upside, and so far so good. We had this really strong day on Thursday. We went ahead and took a long on SPXL, which is the leveraged S&P 500 in the pick service, and that's going well. Doing pretty good on that. So far looks like a short-term up move. We are up against the 200-day moving average, but this downtrend we've been in for the year could be reversing. We'll see. The big upcoming financial report or, development, of course, is Wednesday. The Fed, FOMC, is going to announce their latest position, economic projections and what they're going to do with rates. So FOMC this Wednesday, March 22nd. There's speculation that it will be a quarter point. They have been doing 3/4 and they were doing half. The statements after the last meeting were, hey, we got to stay aggressive, right? We're going to do whatever it takes to get on top of inflation. Some of the inflation numbers look like they were flattening. So there's speculation that the FOMC is going to do a quarter point. And there's even hushed whispers of a 0 point. And, maybe with the backdrop of the banking situation, they're concerned about that. So, all eyes, as usual, will be on the Fed this Wednesday. But meanwhile, market is in the very short term heading up. And again, the banking situation, not crisis, situation with a couple banks is on everybody's minds. And, this time it seems like, between private sector and various governments took some pretty fast action where, they were really criticized back in 08, 09 for taking too long. And again, I don't think it's a widespread issue, kind of overblown. So that's where we're at on the big picture. Let's go ahead and stop this part.